Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews. That's where we talk to a chief executive or a minister or a fund manager or someone who's doing something in the finance industry or the economy that we think's interesting. A few weeks ago, I made some comments about instant finance and Stacy Jones, which caused some controversy. And Richard de Lautour, who's here with us here at interest.co.nz today, is the chief executive of Instant Finance, and he offered to come in and have a chat about instant finance. Thank you very much, Richard, for coming in to the lion's den, so to speak. Yes. Can you tell us a bit more about instant finance, who its customers are, how you make money, that sort of thing?
Sure. Well, look, Instant Finance is a long-established New Zealand-owned company. Its history goes back nearly 40 years. In fact, next year is our 40th year. It's operated in the personal loan market for all of that time, operating through a branch network. It's what I would call a needs-based lender. So we don't lend to people for aspirational purposes, and by that I mean typically customers come to us because they have a problem, they have a need, something's gone wrong, something's broken down and it has to be fixed, or often in Auckland, in the Pacific Island community, it might be a family funeral, a wedding, or a problem back in the islands.
So how big are the loans that people take out?
Well, typically our average loan size is around $3,500, and they're typically for a relatively short term, usually with weekly payments, typically over 2 years.
And what sort of interest rates and fees do you charge?
Our interest rates are at the higher end of the market. For a first-time borrower and a typical loan of that size, the interest rate is 29.95%, and as I say, typically over a 2-year period.
And what sort of fees do you charge when people come in to take out a loan?
We have a standard set of fees based on the amount that's borrowed, and they're charged on every loan, although there are obviously long-term customers that will sometimes negotiate a reduction in that fee, people that we know very well. And that fee basically covers the cost of originating the loan. One of the difficulties we have in our particular business is that we have a very, very high overhead structure. We run 19 retail branches, have a staff of 130 people. So every day the overhead clock is ticking. And the difficulty we have is that it costs the same amount to originate a $2,500 loan, for example, through our infrastructure, which is a bank-like branch structure, as it would cost many of the bigger finance companies to originate a $100,000 or $200,000 loan. And there's many reasons for that. One is that often our customers' requirements are problematical, difficult. Often a customer who may inquire for a loan on their own, we can't make the budget work, so there's an inability to meet the repayments, and that requires often bringing in another family member. With any first-time borrower, where we're taking security, for example, over household chattels, we send a valuation agent out to the house. And there's a number of reasons for that. That's part of the judgment decision in terms of the lending. We get to assess the household, the demeanour of the occupants, the presentation of the household, and at the same time, of course, we do a evaluation of the goods.
So let's say I'm borrowing $3,000 from Instant Finance. What are the fees charged up front?
Well, there'll be an establishment fee up front, which is typical within the industry. As a percentage of the amount borrowed, of course, typically our fees look high, but that's a symptom of the amount we're lending. From that point on, typically you'll pay an administration fee, which I think from memory is about $1.75 for each instalment, and that's an administration fee, and again that's in line with industry practice.
Now what happens if I miss a payment or I miss several payments? What fees do you charge me then?
If you miss a payment for whatever reason, you're obviously encouraged to talk to us quickly. With all these things, the sooner a problem's addressed, the better it is for everybody. We will normally enter into what we call a payment arrangement or a promise to pay, and that might involve doing another budget to understand what your affordability is. And this usually occurs because there's been some circumstances that have changed, some bad luck or a number of reasons, sometimes beyond the customer's control, and there's a need to readjust the payments. So we'll enter into a promise to pay. Provided you stick with that promise to pay, you will not pay any overdue interest. So only at the time that's broken will you start to incur penalty interest.
So let's say I do borrow some money and I do miss a couple of payments and I get sent some letters and you charge me $10 or so for each letter. It's quite possible by the end of the loan, by the time I've paid everything back, that I might have paid, let's say I take out a $3,000 loan, I could have paid back interest charges and various fees of maybe $1,000, maybe $2,000.
I think that would be at the top end, but it is potentially possible. It doesn't typically happen in our business because we've got a very proactive credit team, and problems, as I say, are addressed very early. So if you look at the arrears percentage on our loan portfolio, for example, we have a roughly 5.5% of impaired assets. So that's saying that the principal outstanding on all loans 90 days more overdue is 5.5%. That's quite low given the profile of our loan portfolio.
One of the complaints about personal finance companies is that they make most of their money from the fees and from various charges, including letters, for whenever someone misses a payment. And that's actually how you make most of your money. What proportion of your income comes from these fees?
Well, I think we looked at it just earlier and we agreed that about 70% of income, that fee income, other income represented 70% of interest income. So interest income is still the main revenue, but fees are an important part. And they're a realistic cost recovery of, as I say, operating a business with an extensive branch network.
Just stepping back a bit, what's the point of a personal finance company like this, given that it's encouraging people to spend money they don't have, and often people will end up worse off than when they started?
Well, I disagree with that. As I said at the outset, we're a needs-based lender, so people come to us because they have a need, and I think it's very important to differentiate that requirement from what we would call aspirational borrowers. And these are the people, often in a higher socioeconomic group than the ones we deal with, who are attracted by the 5-year interest-free offers, the retail offers. That's, if we're talking about the debt trap, credit cards and long-term interest-free offers are where the problems are. Our customers come to us because they have a need. The washing machine's broken down, the car's broken down, something's gone wrong in the family. This is not aspirational lending. And I think the interesting thing is, contrary to a lot of commentators' popular belief, many of our customers are in fact not as dangerously indebted as some of those more upwardly mobile people in the next sector up. And those are the ones that are into the aspirational borrowing. It's the flat screen TVs, it's the stereos, and so on.
Now, Instant Finance, who owns Instant Finance and where do you get your funding from?
Instant Finance is owned by two families, both, I think it would be fair to say, low-profile families. The Norsborn family owns approximately 52%. I don't think they have a particular profile around Auckland or in New Zealand. The other major shareholder is a trust associated with Peter Mitchell, who probably is best known for the owner of a very famous racehorse, Bone Crusher.
And how do you raise your funds?
Well, typically, Instant over many years has raised money from the public via a prospectus and a debenture offer. But as our industry imploded from early 2006 onwards through to the credit crisis, we found it increasingly difficult to get reinvestment rates, as the whole industry did. And at the end of the day, by mid-2009, we felt it was no longer appropriate to have any of, if you like, mum and dad's money at risk. So in August 2009, we repaid all remaining debenture holders, and we fund solely now from an American private equity firm.
Fortress Capital. Do you think you'd ever get back into the debenture market?
Well, I think we're in a very good position at the moment. I think we're sitting on the sideline. We're interested to see what happens when the first round of government guarantees expire. We've got our options open, I think is probably the best way to put it. But yes, the company needs to have a secondary source of funding.
And just finally, the Stacy Jones promotional campaign has been part of the publicity around this.
Yes.
How much has his involvement improved or increased your lending and your business in the community in South Auckland?
Yes. Look, I think that's a subjective measure. We are enjoying good volumes of business at the moment, but whether or not that's down to Stacy Jones or whether our previous advertising campaign would have had the same outcome, I really couldn't tell you. Stacy Jones, the relationship with him was is much to do with trying to encourage activity on our website as opposed to getting people into branches. So Stacy was, to some degree, there to try and broaden the customer appeal. And we have a very, very small part of our business where we do lend over the internet. And that has a different rate structure altogether from, of course, what we have in the branches, and much lower interest rates, but a much higher hurdle, if you like, in terms of credit quality from the customer.
Richard de Lautour, thank you very much for coming in. Richard de Lautour is the Chief Executive of Instant Finance. I'm Bernard Hickey. That was another in our series of Double Shot interviews.